So, welcome to today's video. I'm going to be talking about, is it better to be diversified or highly concentrated? And the short answer is it depends on what your goals are, and I'm going to walk you through that now. So, benefits of being highly concentrated is that you have more exposure to your best ideas. So, for example, you often hear famous investors saying, why would you want to have the same amount of money in your 20th best idea in comparison to your first best idea? The likelihood is that you're not going to have enough time and you're not going to have loads and loads and loads of wonderful ideas. So the concept is here, you go into the most sort of conviction, most amount in the highest conviction sort of ideas, and that includes sort of the ideas where you think you're most likely to not lose any money on, or your downside's very protected, but equally you have a really favorable risk reward skew with high likelihood of this sort of going through. And that's sort of generally the sort of sentiment behind that. Now that does come with a lot of drawbacks. Your portfolio is more likely to be volatile. So particularly if one is sort of looking to exit, within the next couple of years, that's definitely less than ideal, not something you'd be doing. But if you're sort of more open to that volatility and you can stomach a lot more, this might be a better way to do it, because generally the better your ideas are and the more conviction you have, generally the better they seem to do. That's how I've sort of felt been the case regardless. And then on the other side, you sort of have the downside of that is the volatility can mean that oftentimes every couple of years you can wake up to your portfolio being down 20% in just a week's time, really. And that's just because one or two things could go wrong in 5 to 10 of your out of the 5-10 positions you hold, and as a result it could just be bad news. The stock could drop a lot, and if you need to exit, particularly during that time, if for example that cash was something you'd be looking to withdraw, that's not really ideal, is it? Conversely, you have the other side, which is you're heavily diversified. You might have 50, 100 positions. Heck, even if you want to go 40, 20 positions, still pretty diversified out there. You do sort of get some of the benefits of, well, my exposure has been reduced. Although I think a common misconception is people think this is a lot, their exposure is reduced a lot more than it truly is, because nowadays a lot of the markets are very correlated, meaning that if sort of one market goes down, the others sort of typically follow. So your volatility is still actually going to be relatively high here, in my opinion, in comparison to sort of what you may sort of expect going in. Even if you go into 100 positions, I still think that you still have that, you definitely have that market sort of volatility still there. Of course, it's not going to be as extreme as you have 5-10 positions, but I still think it's going to be there. And another thing to sort of factor in is that a lot of these factors the risk factors are very similar. So for example, your chances are, yes, you're diversified, but I bet you most of your positions would be in US companies or UK companies or the general primary market you invest in. And a lot of them might be the same sectors, the same industries, which are prone to the same sort of problems. They might all be prone to tariffs, as you can see now. So that's something to bear in mind. You are decreasing your risks to an extent by diversifying, but it may not be as great as you think. So that's something that you need to watch out for, that might catch you out. And you're actually leaving yourself open to other potential risks, which is that for most of you, in fact, even if you're a full-time investor, it's very, very difficult to keep track of 20 plus positions, particularly as soon as you go to like 40, 100, 50, 200, 500 positions. You're not going to be able to track them nearly as in depth as if you had 5-10 positions, where you'd be able to go through the earnings calls, the annual reports, the quarterly sort of 10Qs, and the filings in terms of the news that's going on with the company. You're not really going to be able to understand the industry as much in depth as you could. You could potentially argue you could go with a bit more positions if you were a sort of full-time investor, but for the majority of the people, and even if you were full-time, it's very difficult to keep a handle of. And in fact, you could argue that, well, actually you're leaving yourself open to sort of like the losers in your portfolio, in terms of you may have otherwise sort of caught onto a position that's not doing as well because the company is actually, the fundamentals of the business is deteriorating. Now, had you had 5, 10 positions, you would have been able to spot that a lot quicker because you'd understand the company at a deeper level, whereas here you're not really. So that's just something to bear in mind. Yes, you are more diversified. Yes, you're probably going to benefit from slightly less volatility, although it's not going to be a huge save. I mean, like indices that have 500 plus positions can easily still crash 30, 40, or even 50% during market crashes. So that is something to be aware of um, here. So it just really varies on what style you sort of prefer. For me, I like to go really in depth on my sort of positions and understand them at a high level. I don't have that many great ideas, unfortunately. I don't come up with 50 to 100 ideas per year for me to sort of warrant going that diversified. I've noticed in my own sort of performance that I typically do best when I'm concentrating in a few positions that I really understand, and where I make mistakes, I'm able to pick that up a lot quicker. And potentially it's not even a mistake, but just things didn't turn out as I planned. Perhaps execution isn't where I want it to be. I'm able to exit a lot sooner and understand the reasoning behind it. Whereas I may just hold on to that business for a lot longer and sort of until it's obvious that the business has deteriorated massively. To that extent, I prefer being more concentrated. But again, my goals might be different to someone else. I've still got a long runway ahead of me to sort of keep continuing to invest. If I was retiring in the next 2 years, I 100% would not be as concentrated as I am today. I would be going into more positions. Again, this is just my sort of take, because I would want less volatility. I potentially might not even be in stocks. I might be in something that's more secure in terms of it has less volatility. It doesn't mean that stocks aren't safe. It just means stocks are volatile, so there are risks associated with that if you're looking to exit over the next two or a few years or so. So based on that, I think you'd have to come up with your own decision as to what sort of works best, and that's truly why people say it really depends on your goals, really depends on your sort of appetite and your comfort levels and your mindset. And another thing for me is if I understand a company at a high level and I know truly what it's worth, I think this is another thing I'm not pointed out, is that if I know what it's truly worth and where the business truly stands, I can then be certain that if the company drops in price, that it isn't due to fundamentals, but more of a irrational perspective. I have to have the not just confidence, but the understanding behind why I believe what I believe, and that's the fundamentals. Perhaps I can see the business cash flows improving significantly. It's got a very strong balance sheet, very strong management. It's going to continue. It's got a long runway ahead of itself. Then I know, hold on, something's not quite right here. However, if I had 30, 40 positions, I might start second guessing myself because I've not gotten enough depth to understand each position, and the quality of my ideas will deteriorate as a whole because my nice ideas might not necessarily meet the threshold or the bar that I'd otherwise be looking for if I was more concentrated. So again, it's just perspectives. What do you think's best? Let me know what your sort of goals are and what you're doing. That'd be quite interesting to hear. Thank you.